Talkin Money! Talkin Money!
Well, alrighty then. We're back to Talkin Money with Jeff Tarbell.
I got to concentrate for 2 hours straight. This is like work. If you're just tuning in, you missed a fascinating discussion of cruising billionaires and erotica on your iPad. You might want to get up a little earlier or find another station. But we're going to do a whole second hour. I've got just a load of stuff, mortgage-related, real estate-related, good news, lots of things going on with the harp, all kinds of stuff. We'll get into all that. Take your calls and questions. We were kind of blowing through hour one there. We didn't get to a lot of phone calls. We are giving away some Sierra Tahoe ski passes. We'll do the rest of those by mail now, so thank you for those of you that stopped by and picked those up. Have a good time. Should be some good snow up there as well. Nick's got some quiz questions, but we're going to start out our hour two as we always start out hour one. From the mind of Christopher Lott, I posed a question to Chris in hour one today. If I handed you what did I say, to $100 million? Is that what I said?
$100 million.
$100 million.
Is this before or after taxes?
This is after taxes.
Okay.
This is on a net basis because I know the taxes would totally kill your buzz on that deal. But $100 million, Christopher Lott, what are the top 5 things you would do?
First, Vegas. I would take all my friends to Vegas.
And there goes the rest of the money.
Vegas is pretty awesome without money. I'm guessing it's even better with money.
I'm guessing.
Next I would do is travel. I'd want to see like all the big events. Carnival in Brazil. I'd want to go to, I don't know, like I guess different soccer events. I like soccer. I've been getting into soccer. So
yeah,
I'd
you
like
could
to
hit
go
all
to
the
England.
You could probably hit every major sporting event if you wanted to.
Which I think would be pretty awesome.
That
Maybe
would
go
go.
down to the Masters if it was this. If I got it right now, go to the Masters in Georgia.
Yep.
Next, I think I would take care of my parents, get them a house, maybe get myself a house.
Okay.
I'm never gonna have kids, so I got a bunch of little cousins running around. Maybe I'd pay for their college. I'd put something away for their college.
Okay.
And then I don't know, a nicer car than I have right now.
So far, Chris has spent less than $1 million. This will give you some.
You don't know how I do Vegas, so
You know, someone's sitting there listening to the show saying, "Now wait, I would have bought the soccer team.
That's
I
right.
would have."
you can't do that anymore.
That's true. That's $100 million will get you a very moderate soccer team. And I always think it's funny when they quote people either won or talking about winning. I think I'm going to buy myself a new house and maybe pay off some bills. Okay. Well, your house is a trailer, and your bill, you're talking about. So it is phenomenal what people perceive to be a lot of money and what $100 million really is, and that's
the first thing I do.
Yeah.
I'd increase my liability insurance.
Because
I've heard that the first thing that happens is every single person you know walks over and trips on your front porch and starts trying to sue you. So, no, seriously, the first thing you need to do is talk to an insurance guy and get your liability set.
No, turn your mic back on, Chris. This is a legitimate question. Would you be willing to stand up on TV and say, I won?
No.
Would you?
Well, it's going to get out.
It's going to get out, but there is no way in hell that I would stand up, and it doesn't matter if it was $10 million, $1 million, or $1 billion. I would not stand up on TV and say, "Hey, look at me," because I would be afraid for my kids. I wouldn't do it. I just wouldn't do it. And yet, you see a lot of people that do. But it'd be interesting to see if any of these three stand out. Now, if I was part of a group, we had our office pool, 40 of us won. Part of it. Okay, maybe you can do that. But I certainly would not stand up and stick my hand in the air.
Right.
Please pick on me. come violate all my.
Trust me, Colin Grail would be a very busy man. If I won,
he would be. So we've got a lot of things to cover today, and we welcome your phone calls at 339-1140 or 1-800-920-1140 if you would like to jump in. And I know I haven't just brought up anything other than just my own musings for the last hour, so we'll get in some stuff that might bring up some questions. I did see this. This was cool. This kind of goes back into our discussion about our local arena and what does it mean for jobs and all the spin-off that comes out of capital improvements. This was out of the Sacramento Bee this week. A West Sacramento company will supply all the concrete for the San Francisco 49ers' new stadium, and they'll be hiring 80 new workers. Clark Pacific, which is out of West Sacramento, expects this contract to be, and I just lost the number, 20,000 tons of concrete, for the 68,000, and they're on a quick deal. They got to get this thing done pretty quick. And I thought I saw it somewhere. They estimated about a $15 to $20 million contract for one supplier in West Sac off the San Francisco deal. So that's awesome. I hope that we're signing other concrete deals and other steel deals and other seating deals to build our own arena. But we're going to start to. It'll be good for us to watch the spinoff of the San Francisco stadium, because it's going to go up quick, and we're going to see a lot of local companies get some business out of that, and I think that's great. So congratulations to those people. And if you're looking for a job in the concrete business, probably a lot of that job will be trucking. I mean, you got to get from the plant in West Sacramento to, that's got to be not an easy drive with a big old concrete truck going to wherever the new stadium is going to be. So if you're looking for a job there, maybe they'll be hiring some people soon. Congratulations to all of them. I did mention there before the break that this was like really week one, or maybe week 1.5 of the HARP 2. HARP 2 is the long-awaited, much-anticipated, highly touted Fannie Mae and Freddie Mac, primarily and mostly Fannie Mae, answer to all of you, or the many of you who have been unable to refinance your properties because you were upside down. And thankfully, and thank you to you, those of you who have stuck with it, you've been making your payments. You've been kind of left out of the process for a lot of the most part. A lot of you have rates that are in the high 5s and 6s, and you've been unable to do not much about it. So this program, which is HARP 2, started last week, of course, right when I was on vacation. And so personally, we've had a fair amount of success with the program I would say out of the first probably 50 applicants I had. We ran through, I would say probably 30 of them were immediately approved through the program. And what you're getting out of this, and so we're kind of all learning right now, what does this really mean? We thought maybe there would be an approval where you didn't have to prove your income, kind of like the FHA Streamline, Nick, where there's no income documentation. That we're not seeing. We're still having to see you have to qualify based on your income, and you still have to have a decent credit score, which most of you do. But we are getting the property appraisal, or the inspection waivers, which basically means we don't have to go out and do an appraisal on your property, because Fannie Mae's database, or their system, already has background information on your property. It probably has an appraisal in file. It knows about it. So it allows you to kind of go in there, put in an estimated value. The system will come back and tell you, yes, that value, we agree with that value, or no, we don't. And then you can kind of move on and move forward that way. So it is a little bit surprising. Some of them are being kicked out for no apparent reason. We don't seem to know why. They're just getting a flat-out rejection. And that's been a little bit frustrating because it doesn't tell us what's going on. But for the most part, I would say that the HARP program, HARP 2, has been fairly successful. The rates, and this is the interesting part to me, and I've heard this from other people in the industry, is that there's a group of people that have been waiting for a long, long time for this to come around. And now that it's here, the expectations in their own mind of what was going to occur are a little different from the reality of what's going to happen. So HARP 2 is not a loan modification. It's not a principal reduction. It is a rate reduction, okay? And the rates are not the same as you can get if you went out and bought a house and put down 20% down. So when you're starting to see some of these rates, and the rates have been pretty consistent, amongst lenders, around 4.5% on the 30-year fixed, and around 4.25%, if you will, on the 20-year. There is no 15 yet. And that still makes a big difference to a lot of people. And yet some of the feedback that I've seen and others have seen is like, oh, well, I thought I would save $400 or $500 a month. Wait a minute. You're saving $250 for very little cost, and you're finally able to do something. And I don't know if the letdown is because that people were putting this as kind of their last gasp of like, if I can't save at least $400 to $500 a month, I'm not going to be able to stay here. Maybe that's some of it. That's not what I'm hearing, but. So I don't know what the expectation level is, but most people are pretty satisfied with it. But it is not the same rate, okay? And think about this, folks. You're getting a loan for a property that is anywhere between 125% to 225% upside down with no appraisal. Okay, that is a risky loan. Frankly, I'll be very honest with you. I don't know who would want these loans. I mean, the lender who already has it, is already at risk. But I'm a little surprised that there are as many lenders willing to take on somebody else's potential problem as there are. And one of the biggest banks, the biggest, they own 1 in 7 mortgages out there, right at the end last week decided, you know what, Nick? They said, we don't want them. And so one of the largest banks out there said, unless it's already something we service, we don't want it. We don't want to pick up everybody else's junk. Now, I contend that a lot of these people have been, if they haven't left their houses or walked away by now, they won't. They have very good credit. But anyway, so if you have some questions on the HARP 2, we can discuss that today. 339-1140 and 1-800-920-1140. Keep in mind, you must have a Fannie Mae or a Freddie Mac loan. And you can just Google, or you can go to my website, jefftarbell.com. There's a link to them. Or you can just Google, does Fannie Mae own my loan? And it has to have been prior to March of 2009. And that's the part that people are getting caught on. Last year, there was a couple banks that will go unnamed that were very, very, I don't want to use the term sneaky, but they were very, very quick to offer some what I think are very minor refinances, which they dropped you like less than a half a point. And they refinanced you. And when they did that, they rewrote your loan into 2011, so they kind of used up your HARP exception. And they put you into something that was in the low 5s. And now that rates are in the low 4s, you can't refinance if you just did it last year. And a lot of people didn't really know what was going on. They kind of took advantage of it and are a little bit upset now that it wasn't made clear to them. That was kind of their one and done, if you will. So we can talk about that some more after the break as well. I do have one comment for everybody who's either buying a house or refinancing. There's going to be a big wave of requests and people coming in under the HARP. There's a big wave of requests of people coming in trying to modify their loans with the big banks and short sales and everything else too. It's extremely busy right now. And a lot of it is busy work, but it's busy, particularly at the big banks. So, which is good for me and good for our company because we don't do modifications and that stuff. So we're able to be a lot faster. But it's going to take some patience. I mean, you just have to be a little bit patient. And I think the conclusion I've come to in the last year is that the consumer doesn't really think in some part that we're dealing with real money. I don't think there's been so many billions of dollars tossed around and we're going to forego this and we're going to short sell this and we're going to let you walk away from this. And we've got to the point where we've trivialized the home loan so much that people don't really think it's real money and it's somebody's money. And that's a little scary. Because if I were to come to you and ask you personally, will you loan me $500? What are the kind of things you'd ask me? How am I going to get my money back? Where's it going to come from? What are you going to do with it? And yet when people come and ask for $250,000 and they don't get it by snapping their fingers, they're frustrated. And it just blows me away. Now, some of the stuff that we are being required to ask for and provide FHA and Fannie Mae and stuff is ridiculous. I mean, it has gone so far over the reality scheme. It's ridiculous, and I totally agree with that with everybody. I mean, we're in the middle of that. I get it, but you know what? When an industry and a group of everybody loses a few trillion with a T $trillion, okay, there better be some changes, and we're going through that right now. And it's not the first-time buyer who's walked in the door, has never dealt with this before, who's got the problem. They just do whatever you tell them. It's the people who did this 5 and 6 years ago. I didn't have to do that 5 years ago. Duh. That's why we're in the problem we're at. We didn't have to do anything 5 years ago. Here's a mirror. Blow some smoke on it. If you can fog the mirror, you're alive. You get a loan. That was the problem. So, yeah, we've swung way, way over to the other side, and I'm with you on that. But you know what? You got to come into this with just whatever it takes. You know what? This is ridiculous. You asked me for the same thing twice, or someone doesn't understand. I get it. It's ridiculous, but that's kind of the price you pay for getting rates that are under 4% and house prices that are ridiculously low. There's a penalty that goes with that, and some of it is just the annoyance. And I'm with you, and our whole industry is annoyed. But just a little bit of patience because it is real money. I mean, you are asking somebody to write you a check. And this is the kind of the way I explain it, Nick, and we'll take a break. My company and myself personally has to guarantee your loan. So if your loan goes bad or someone doesn't buy it from me, I've got to write a check for a couple $100,000. That's real money. Now, I don't know how many $200,000 checks you can write, but that ain't my Steven Spielberg yacht sitting out there in the water. I can't write more than maybe one before I start to get the little sweat going and we start being in trouble. So it's real money. And what's happened now is the Fannie Mae and the Freddie Mac and the FHAs of the world have said, you know what, we're not taking these losses anymore, boys and girls. You're taking the losses. You wrote the loan. You made the fee income on it. You screwed up. You didn't get the information you want. You write us a check back, and you go figure it out. And that is real scary for a lot of people. And that goes across the board for every big bank and every little mortgage lender. They are all on the same page, and that can scare the heck out of a lot of people. So that's what's going on behind the scenes, if you will. We got one more quiz question for you at 339-1140, 1-800-920-1140 there, Mr. Locksmith. What's your quiz question?
All right. For those of you that have probably heard of this thing called the World Wide Web, you're probably familiar with this, but there were some people that went door-to-door selling this product. They sold it for $1,500 up to $10,000.
Uh-huh.
And a CD came out that they even tried to sell this for $1,500. So what product were people selling door-to-door for $1,500 to $10,000 that kind of got replaced by a thing called the Internet?
Yep, and this company is now selling off its last printed versions of it, which might actually, could you imagine, if you got the last version of that might be worth some money. So, but now you can Google it. But what is the company or the product that was sold door-to-door forever and has now gone the way of the BlackBerry? We'll be right back. 339-1140.